Hey, what's going on, family? Today is the 26th of March, 2024. We're going to talk about GameStop today because after trading today is when they're going to go ahead and release their their earnings report. And apparently, given the price action yesterday, the market may actually be expecting a pretty good earnings release. I mean, you guys can see just yesterday alone, GameStop ended up 15.42%. So maybe someone knows something regarding this earnings that's due to be released at the close of trading today. So let's go through this article real quick from Benzinga. You guys can see from the title, Ryan Cohen stock trades with company's cash. I don't know what that's about. We're about to scroll down and see what it has to do with GameStop potentially being up 15.42% on yesterday's trading. Maybe it did, maybe it didn't. So now, video game retailer GameStop is set to report fourth quarter financial results at the market close today. Earnings estimates, some analysts expect GameStop to report revenue of $2.05 billion in the fourth quarter. The company reported revenue of $2.23 billion in last year's fourth quarter, so they're definitely there making in revenue, which is very good. GameStop has beaten revenue estimates from analysts in 2 of the last 4 quarters, but only 2 of the last 6. So yeah, it's been a slow grind trying to bring GameStop up out of the market, but apparently 2 out of the last 6, it's not that good though. But I mean, you take what you can get, right? That's why the market is trading at $15 right now. Analysts expect GameStop to report earnings per share of 29 cents for the fourth quarter, compared to a profit of 16 cents per share in the prior year's fourth quarter. The company has beaten per share estimates for analysts in 3 of the last 4 quarters. Okay, cool. This is what analysts are trying to say for GameStop. There isn't a lot of coverage by analysts on GameStop stock. I wonder why, because during the short squeeze debacle, everyone was talking about GameStop when the market ran up to $120 and completely crashed since then. I guess as price dwindles and goes lower and lower and lower, I guess the analysts don't cover anymore. Wedbush analyst Michael Pachter reiterated an Underperform rating and $6 price target in December, which came after the company's third quarter financial results. So even he's wrong. I mean, this needs to be updated. If he didn't update this yet, something's wrong, because they're trading at $15.12. Unless he reiterated this same Underperform rating and he still has his 6% price target. The analyst said GameStop saw weakness in software in the third quarter and had an outperformance in hardware. Pachter was also critical on a new development from GameStop, which could see a change in how the company uses cash. GameStop shared in a filing that it would allow CEO Ryan Cohen to invest the company's cash. The company said it has traditionally invested its excess cash in short-term fixed income securities. Maybe this might be the reason why the stock went up 15%. Like I said, apparently they trust Ryan to go out and invest the company's cash to bring in more revenue. On December 5th, 2023, the board of directors approved a new investment policy that permits the company to invest its equity securities, among other investments, GameStop said. See, that's one thing I want everyone to understand and realize, is that you can change the rules to fit your benefit. Like, many people think there's too many guardrails, there's too many barriers, that you can't do things. Understand that these people who sit high and look low, they able to manipulate, change, revise codes, rules, regulations at the whim. So how is it that a business like GameStop can use their own internal cash and invest it? Do you think that's sound business practice, that people on the inside of GameStop has access to the company's cash and trying to make money from it? Or should that money that they got in excess be used to, make the business stronger, try to go out and create new product, enter into a new market space? Like, how do you suspect them to use the cash? It's at their discretion. So apparently the board of directors, whoever these people are, said, Ryan, go ahead, use the cash so that we can go ahead and try to bring as much money as possible, because apparently there's nothing else for us to do with this money. We can't put it in new infrastructure. We can't try to go out and create something new in artificial intelligence, no gaming platform. Like, what can we do with this cash? We can't even, do they even do dividends? Let me see this chart. Like, you don't even see dividends here in GameStop. They did do a dividend, look like, back in 2020. It was at 38 cents. Like, the excess cash can be given to the investors, but they want to give it to Ryan so he can invest it. How do you feel about that? Rather than GameStop giving their excess cash dividends to you, they said, Ryan, go ahead and take it and make us rich. But nevertheless, let's go ahead and talk about this. So we did a price prediction in GameStop right there in February. We anticipated that the market's going to go higher in price. It did. The only thing that went against us in our price prediction is that the market in GameStop did not hold our first buy zone. They didn't hold this area. So the market ultimately saw our second buy zone here in GameStop. So that was the only thing that was incorrect in our analysis. And then after that, the market just simply consolidated in between the sell zone up here and this buy zone down there. That's it. Earnings is coming through. The market is feeling jitty right now that it went up 15%. It'd be crazy at the ending of today that the market in GameStop will come back down 15-16% off the earnings report. So again, I'm not changing my price prediction. Depending on how strong the market or the earnings release is, we can definitely see this market try to break above this sell zone here and maybe attempt to run up here towards this $18 area or this sell zone here. So I'm gonna put that here. Okay. Let me see. Okay, so that's like 7% there. So yeah, I'm not going to change it yet, but if the market reaction to the earnings release is that strong and it breaks its sell zone, then I would be looking for it to run up here. So I'll just include that. But yeah, go ahead and give me your thoughts though. Make sure you maintain profitability, and as always, trade different.